What's up, everyone? Today we're going to talk about fair value gaps, also known as FVGs. Most traders don't lose because they can't find an FVG, they lose because they're trading the wrong ones. Welcome to ICT Series Episode 4. Alright, guys, welcome back to the charts. So let's go over what is a fair value gap, or FVG as some people say. Um, let's take a look here. We're going to find a nice uptrend or downtrend. Here, this looks good. So we're looking for a 3-candle pattern. That 3-candle pattern is going to look like this. One candle here, one large candle here, and then one candle here. We need a 3-candle pattern where price moves so aggressively that it leaves an imbalance, and I'll show you what an imbalance is. Institutions create these moves and markets often return to rebalance before continuing because there's orders there that need filled, or stop losses that markets like to take. So we'll look for one right now. Let's find a good one that is pretty much picture perfect, so you guys aren't working too hard. It looks like a pretty good one, but it has a new week opening gap there. So hold on, hold your horses. I promise I'm hurrying. Here's one right here. Look, I already had it drawn out from a while ago. It must have been. Alright, so this is a 1-hour fair value gap. I will exit that out. What are we looking for? Like I said earlier, so we're looking for a 3-candle pattern. It could be these three, any three where you have the price wick right here, a huge increase that's aggressive that leaves an imbalanced area. And then you have your 3rd candle here. The reason why we need 3 candles is that we use these wicks to mark out our fair value gap. This yellow square has orders sitting in it that priced move way too aggressive for the banks to pretty much catch. So the banks want to come back down, catch these orders to continue the uptrend. But you also got to remember from the last video or 2 videos ago where we talked about market structure. So remember what trend you're in. So you draw this box here. Sometimes this will be, 1, 2, 3, 4, 5, 6 blocks down. Because if you're using TradingView, sometimes the brush is there, so you think like, oh, I can't find it. But 6 blocks down, draw your square, and then you can click it and add a text. So I usually put 1 hour FVG. Sometimes I put 1 FVG. And then for 1 hours, I usually like to make it a little bit more like, I use blue for 1 hour because it lets me know like, okay, hey, this is a higher time frame FVG. The higher the time frame, the more true the FVG will hold. So if you have a 30-minute time frame, that's good. 15 5s are good, but once you start getting on to 1 minutes, they work just as well, but they can easily get disrespected rather than like a 1 hour. So what happened here, and why is this a good fair value gap? You have let's go back to market structures. So you have a low, a high, and then you have a low and a high. So we are in an uptrend, but to continue a healthy uptrend, you have to break structure. So this was the structure right here, and price broke through, causing a FVG, making this fair value gap a very reliable fair value gap because we are also breaking structure and continuing trend. See how price goes up, comes back down, holds this. So my entry, if I was trading the 1 hour chart, would have been here. I would have been entering at this very good wick where you have this extreme snapback up, and my stop loss would be here, which is a 1 to 1.5 ratio, targeting these highs. I mean, that is a great trade right here. You do go into a little bit of down drawdown, but you're not hitting your stop loss. 176 points. You're almost looking at $4,000 on NQ if you're trading one contract size, if that trade hits. Now, let's talk about why price returns, which I touched on it. But price returns because there's liquidity down there, and the institutions need to rebalance this out. So the market isn't coming back because fair value gaps are magic. There's nothing magic about them. It's coming back because big money couldn't get completely filled. And when we get these wicks down, then they are satisfied. Big money is satisfied. You have these good FVGs and bad FVGs. So let's talk about that. What is a bad FVG? Right here. So you have a down 1, 2, 3, right? And then you have your fair value gap right here. This is just another fair value gap, but a down one. So 1 hour FVG. But why would this be a bad one? This would be a bad one because we're in an uptrend, guys. We're in an uptrend. So you're not looking to sell right here, okay? You're not looking to find somewhere to short the market where it's a healthy uptrend. It would be unhealthy if we broke structure, which would probably be right around here. So if this FVG came down here and broke of structure, actually a market shift, this would be a market structure shift actually, then I would consider looking at shorts into that FVG. But since we're in an uptrend, this is a bad FVG. You don't want to look for shorts when we are in a high uptrend. So good FVGs, you're looking for strong displacement, right here. A large candle. This is a large candle. Break of structure. You broke structure. And a clear trend, which we have a clear trend. So bad FVGs, again, would be tiny candles. You know, there's tiny FVGs. Let's find one. Let's find a tiny uptrend FVG. Look at this. Look at this, guys. They're all over. Once you start really getting into the market, you'll see them all the time. This is great. This is a good example of a bad one right here. Why? Because we're in an uptrend. So this is awesome that you can just see these everywhere. Let me see if I can find a bad one for you. You know, here's a small one that leads into this small one. So you know, even though we're in an uptrend, you're not getting, it doesn't look picture perfect. That's why price just breaks through this. If it was bigger, you know, like the ones we have here, where you get a nice strong full candle, you consider it good. You don't want to look for FVGs when we're in inside consolidation days and choppy markets. So right here, perfect example. Ignore the fact that we're in an uptrend, but let's say that we're in a downtrend, right? And you get this 1 hour fair value gap. You don't want to trade these gaps because look how choppy it is. So choppy. It's not going anywhere. I mean, price is ranging anywhere between 170 points on an NQ. It's not making a move. That's pretty bad. So, you know, this isn't an FVG where I'm looking to short, and it completely disrespects it right here. So now the whole thing's invalid. That's a very very odd FVG. I wouldn't consider that. I'd go back to my perfect point here. Here's my cross-off list if I had to make one. It'd be strong displacement, large candle, break of structure, and a clear trend, which we're in a clear uptrend. Pretty simple, okay? It's really simple. I'm going over the basics. Guys, the hardest part about trading, to be completely honest, is human behavior and trying to ignore human behavior. You can be up, and we'll talk about this in risk management episode. But to be up $1,000 and get greedy and want more, and then just be down negative 1,000 because you were just wanting a little bit more money, that's the hard part about trading. Not structure, not charts, nothing. So I want you guys to, one, get a TradingView and go get on the charts, man. Get on the charts. Look for fair value gaps all over. They're everywhere, guys. They're everywhere. There's a lot of other things I'll talk about. And then if you get TradingView, which we'll talk about later, you guys, there's certain types of they're called indicators. So ICT, FVGs. You can get these indicators. I don't know if this is a good one or not. We'll look. Let's drop down to the 5 minute. Usually they'll show in the 5 minutes. You can get these indicators, guys. I will show you a good one. ICT order flow, maybe a good one. No, not showing any gaps. Right here. There's indicators that will show you where these gaps are. What are good gaps, what are bad gaps. Market MSS, market structure shift. Getting TradingView helps you out a lot, because sometimes you don't even have to find these. If you find the right indicator, it will, it'll do it for you. It does all the hard work for you. I'm teaching you the basics just so it'll help. To get this many indicators, actually, you'd have to have the essential plan. So, yeah, just go over your TradingView charts. Look for good ones, look for bad ones. It's just about training your eyes. Training your eyes to easily find them. That's what this is all about, guys. Trying to think if I'm missing anything. But that's it for the charts today. So I hope that helps everyone. So FVGs are one of the main tools we use in ICT. So master that, do whatever you can. And like most people say, is you don't become profitable by learning 100 setups. You become profitable by mastering one, and FVGs is a major one to master. So like, comment, subscribe, follow, do whatever you need to do. I have a very small short clip. I want you guys to check it out here. We're going to make everybody profitable.
What's next, Dom?
Is it official? Does this change anything?
This changes everything.
Who would've thought should it be like this? Rockin' Louis monogram, pushing Nil on my bitch. Find the one doing the killing, dropping bags in the bliss. If the rap don't work, then I'm back in the licks. Me, Tay, BJ, sitting back, sipping trips.